Hey everybody, welcome back to another live stream. Before we get into the show, which will begin in a moment, I wanted to let you know that if you have any questions throughout the stream, remember you can always ask them on our website. We have a live chat support ready and able to help you. My team there is available if you have any questions about any of our products, services, or just have a question for fun. Check it out. Link will be down below in the description.
Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good morning, everybody, and welcome back to another live stream. I am your host here on the A1 Trading Stream, Trader Nick, on my YouTube channel. We are streaming as well as on the A1 Trading YouTube channel. Good morning, everybody. Say hello in the chat real quick. Let's hear some hype in the chat. If you guys are feeling good today, give me some hellos, give me some how are yous. Let me know where you're tuning into the stream from. There are 450 of you guys, and we just turned on the live stream. Say hello in the chat. Let us know where you're tuning in from. Friendly neighborhood cat dad is in the building, and check out the new setup in case some of you guys haven't seen it yet. We got the trading view, we got the trading battle gloves, and we of course got the YouTube plaques and all that good stuff. We're here for CPI, which comes out in 13 minutes. Should be a very interesting day for markets. And I want to say, this is just cool, in terms of a mental checkpoint. Some of you guys, and you know who you are, some of you guys who have been watching this live stream with me for years now. And I want to say a special thank you because, again, big days like this, we get a lot of the regulars coming back in to say hello and tune in for the event. Just want to say, hey, how are you? And also a big thank you to you guys for the support along the way. This has come a long ways from my college bedroom a number of years ago. And some of you guys will remember those days fondly as I did. So we're jumping into some charts. We're going to be taking a look at the CPI number as it comes out today. I've got my coffee, so we are good to go. And all the people in the chat saying hello: Quebec, Nigeria, Botswana, Kenya, Jamaica, India, Somalia, America, South Africa, Europe, London, UK, Germany. Cool to see it. Let's do it, guys. Let's take a look at some charts here. Of course, today we are gathered for the main event. We are here for the CPI numbers coming out from the United States in about 10 minutes or so. And what you can see here is that we've got CPI and core CPI both coming out in just about 10 minutes or so here. Why does this matter? What is it? First of all, before we jump into technical charts here, why does CPI matter? Well, it's what the Fed is using. Of course, the Fed pays attention closely to two main things. They pay attention to jobs, and they pay attention to this guy right here, inflation. And these two sort of have impact on one another. Some of you guys may know that, if unemployment gets too low, it can cause a spike in inflation. And, that's where we're kind of at. So we're watching today to see what the inflation headline numbers as well as core are going to be. Now, a quick recap: CPI numbers year over year. This is going to show you a basket of goods and how it has changed over the course of time, right? Are prices rising for consumers or are they falling? And that notably will tell us a lot about the Forex market, will tell us about the indices. If you're watching an index like the S&P, these are all going to move on this. Of course, gold as well. And then core CPI is the same thing. It's that same basket. Here's my poorly drawn basket, right? It's your poorly drawn basket, but we take out of the basket a few things that are more volatile, like food and energy, right? So gas prices and what the oil market's doing, those things can heavily impact inflation numbers. So we also offer the core CPI number, which will tell us sort of more stable goods. How are their prices rising and falling. So it's an important day, and we're going to be giving plenty of coverage. Stick around here. If you guys are just tuning in, I just want to say thank you for being here. Let's jump into some charts. And I want to start where I'm going to be a little bit selfish. I'm going to talk about a trade I am personally going into this event. I am currently still long on gold. So let's go through this really quick. Here is your 4-hour chart. And I'm trading from the United States. And in the United States, of course, we have a little bit of limitations in terms of brokerages that we can use. In terms of regulated brokerages, I can't trade gold unless I'm trading on the futures market or on the stock market via ETF, which is what I'm choosing to do here. So I am actually long gold, as its recent pullback got me involved. So I picked it up on a retest. I am currently floating going into this event. And yes, I do plan to hold this into the event. I'm a swing trader. So I've got my stop loss at break even. In the worst case, we'll take a break even trade today. In the best case, it may rally higher. But for the gold traders out there, what would cause gold to rise and what would it cause to fall? And technical analysis wise, what are we looking at? Well, I would say, again, I'm long gold. And part of the reason for that is that we have, in my opinion, a very technically sound chart. We've got a nice overall upward trend. Here's your daily chart. You can see very strong upward trend. And we've retested recently with some resistance, the all-time highs. The all-time highs have come into play. We've seen sellers come into this market and push us back down. But this does not necessarily mean that we're just going to crash down from here. Could it mean that? Possibly. Again, we don't know the future here. We're traders. We are following what the markets are doing. We are, trading momentum. If momentum goes away, I'll be out of my trade. That's why I have my stops at break even going into an event like this. So what I want to talk about here with gold is I picked it up. So I am already long and my stop loss is already at break even. I shared this alert inside of our Discord channel. By the way, guys, we've got 8 minutes. Join our Discord channel if you have not already. Let me show you what that looks like, and then I'm going to tell you how you can join. So inside of the Discord channel, I share all the trades that I'm taking. So this is my gold trade, right? So when I take a trade, I share the updates and the analysis and breakdowns inside of our Discord channel. It is not a traditional signal service. I'm not here to tell you what to do with your account. It is a service where you can see my trades shared as alerts, where you can get full breakdowns and explanations as to why I took the trade that I took. So when I first took this trade on gold, I didn't just give you, hey, here's my entry and here's my stop. I gave you my analysis, resources I used, pictures of the analysis, updates with it. And if this would be something that was helpful to you, let me tell you how you can get access to that here today. So I'm going to drop a link in the chat in just a second. Give you one moment to grab that. I am operating solo today. I'm not sure. James might have slept in on me today. So here is how you can get it. So if you guys want access to the Discord right now, get Discord access, message us here. Check it out. Click this link right here. I just dropped it in there for you. It's right below in the live chat. Get Discord access. Message us using that link. We have staff on deck right now. Oh, wait a second. Is it going to let you message? It might not let you message. Oh, I'm coming. Hold on. It might be turned off. Bear with me here just a second. I'm running solo show today. I apologize for this. Let me see settings. Hold on, guys. You're not going to be able to message. I just have to turn it on. We have like hours that we do. Settings. Hold on. I'm working on it. Okay. I'm doing it. I'm sorry, guys. So you know what? We might not be able to do it right away. We have a chat widget. There it is. Okay. Sorry about this, guys. So I just made it so that today is Wednesday. I'm going to make it so that it is open at 8 o'clock. There we go. Sorry for that, guys. Now you can message. I apologize for the delay there. Now that link should work. Okay. Click this link. It's been dropped in the chat. If you guys want to join the Discord, the link is right there. It should work now. It was having some issues. I had to extend the hours that it was available, and it now is working. So I apologize for that delay. Hello to everybody in the chat. Yes, thank you for being here. We've got a couple minutes before CPI numbers come out, and gold is selling off a little bit here prior to the event. This is your 4-hour chart, and you can see, again, I mentioned I went long here. and holding on to it still. My stop loss is trailed at break even, so I can't lose money on this one. I am waiting to see how the CPI number comes out. Now, I talked about CPI and how it may impact the price of gold. If CPI comes out less than expected, if we see inflation concerns dwindle further, as confusing as it may be, this might be short-term very bullish for gold. Why? Well, because if CPI, if inflation numbers come out and they are sort of more relaxed, the Federal Reserve may be less likely to raise rates as they are accomplishing their goal of getting inflation under control. If that occurs today, I would argue there is a good solid chance if you get a surprise, like a real surprise in terms of cooler than expected inflation, I would not be surprised to see gold banging on the door yet again at that 2060 mark. Now, I am not forecasting that that is what is going to happen. I am not a crystal ball owner. If anybody's got a crystal ball, hit me up because I could really use one. It would make trading a lot easier. So I don't have that. However, what I do have is I do have, the foresight to know sort of what I'm going to do in both cases scenarios. So let's talk about the inverse. If CPI comes out hotter than expected, if CPI is very stubborn, it is likely that the Federal Reserve may take that as it needs to take its course towards further rate hikes. Further rate hikes, as we know, are a pressure on the gold market, in which case, in that situation, I'll be taken out probably for break even if we get sort of a very high or stubborn CPI reading here today. So when I'm talking about this stuff as a trader, I am making myself prepared for all case scenarios. I don't know what the news is going to do. I only know what I'm going to do in both cases. Hot inflation, cool inflation. How am I going to trade it? Well, again, my stop is at break even. I showed you guys that trade. So let me pull it up one more time for the people just tuning in. I've got a stop loss trailed to break even on my gold position. If CPI comes out hot this morning, I'm out. I'll take a break even trade and I'll say, hey, it's all good. I took this trade several days ago. It's a swing trade. If news takes me out, no problem. But if CPI comes out cooler than expected, which I think there's a possibility, we may see gold shoot higher, in which case, how will I manage that? I'll look to trail stops further into profit. Okay, so that is how my game plan looks for today's market volatility, right? So there is some context. And again, that's how I'm playing it. Please do not, do not gamble on this event. It is a temptation for many traders. They get involved with this stuff. They get themselves into a lot of trouble. They gamble going into an event like this. We're not here to do that. We are here to, trade professionally, which means, small sizing and patience and long-term compound growth on accounts. Anyways, guys, we've got 1,000 of you guys in here. If you're enjoying the stream, smash that thumbs up button. Do not go anywhere after the event. After, we're going to have commentary from myself and Ivan. Post commentary, we're going to be going through what happened with the CPI numbers and explaining that further. So again, we will watch my my charts here. Let's set up our charts for the spike here. So I'm going to put gold in the top left. Of course, you guys know I've got my position. Actually, gold is already on down here. So let's change it out. In the top left, we're going to put the dollar here. So dollar index is going to go in our top left category. I use 15-minute charts just to watch the news. I do not trade using the 15-minute chart. Nothing against it. It's just I'm a higher time frame trader. I'm a swing trader. So we've got dollar top left. We've got gold top, bottom left. We've got S&P 500. We're going to put that in the top right here. So we've got 15-minute charts there. And then let's put the dollar yen bottom right. So again, guys, we've got our charts loaded up here, and we've got 45 seconds until the CPI numbers are due to come out, and we will react to those numbers, and I'll give you guys my take on it, of course. So let's see how. We got breaking news here in just 30 seconds, CPI and core CPI. We'll keep those tabs loaded up here, so we'll come back to this as we get the numbers. So about 18 seconds. Again, not trading the spike, as that is a very, very risky way to play the news. We are purely going to be looking reactionary. We're going to be looking for setups post spike, as where I think that's where you can find some better setups. So here it goes. News coming in. Gold up Dollar yen down. S&P 500 popped for a second there. Now there goes gold. Dollar down big. Possible cooling inflation numbers out. Let's go see what they have to say. Look at that. Gold is flying. That is not bad for the position. Yeah, look at that. So we are floating a nice profit there, up about 900 at this point, and back in the green suddenly for the day. Very cool to see that. Let's go see what's going on with the news numbers. So we just had 0.4% on core. Interesting there. But then we had headline 4.9% compared to the forecasted 5%. We are officially in the fours for headline CPI. Month over month stayed unchanged, whereas we had core CPI remain stubborn at 0.4%. What does that mean for markets? Well, let's go take a look at see what's going on. Well, the S&P is up. We have a shoot up to 41.35 for the S&P. We've got to take a look at dollar yen. Look at that, selling off hard here. Dollar bulls having a tough time today, as this one just completely just fell out of the floor. We've got gold trading just under 2040. Again, good for the position. We'll take that one here. So that's better than if I was taken out for break even, though. You know, you guys who are regulars on the channel, you know, I've been taken out for break even many times on news events. That's just how it goes sometimes. So a good pop there. We'll see if it can last. That's the question, right? Because a lot of times you get these events and then they sort of erase themselves shortly after. This is a little bit interesting because you have some numbers here that are a little bit mixed, right? You've got core CPI month over month coming out 0.4%. Now, what is that telling us? Well, that's telling us that excluding gas and food prices, inflation remained relatively unmoved. However, headline inflation, CPI year over year, continues to come down at slightly faster than expected pace at 4.9%. So what that could be is perhaps, we've talked about oil a lot on the charts. And in fact, let's go take a quick look and see if oil is impacted by this at all. Oil, right, popping up here, 73. Big move here to the upside here this morning, off of this CPI number. And oil has been sort of, and it's been an interesting one, right? Because in April, you sort of had elevated prices that followed through to the downside, but then here in May, we've seen prices come down quite a bit. Now, this, of course, has a big impact on inflation, and perhaps we'll talk a little bit more about that with Ivan here in just a moment. Look at this. So here's the euro popping off of the lows, holding support, continuing to hold support here. So you've got support zones here around 1.096. If this level holds stubbornly, it looks like it may have room to expand higher. The dollar here, like I said, is very weak. So finding some resistance, it seems. Still, for me, I haven't been trading the dollar. Still not really quite interested in trading the dollar because, to be fair here, we're still sort of stuck in this range that we've been stuck in. Despite that, though, this is a pretty good reaction here from what sellers are wanting to see. Sellers may want to be seeing this area hold, this multiple top here, rather than see it go the whole way up, right? So if price was able to break down off this, see some follow through here today, that would be where I'd start to actually get interested in the dollar trade, etc. For me, like I said, I am interested in gold for several reasons. I've been very much on that gold train recently due to the several things going on. You've got regional bank issues. You've got the debt ceiling here in the United States that potentially could cause some fear surrounding that, while Republicans and Democrats try and fight yet again over whether or not to raise and what conditions need to be met in order to raise the debt ceiling, and so on and so forth. Despite that, though, we are seeing gold catch a nice pop here. I think, like I said, with some momentum, gold could return back to the previous highs, and perhaps on any of the things that I just talked about that are very risk-off concerns, any of those that surface aggressively, I think takes gold to new highs. We'll see if I'm right about that. That's been my call. And if I'm wrong about that, please, I invite you to make fun of me in the comments. It wouldn't be the first time, and it definitely won't be the last. So let's bring in my good friend and my trading compadre, Mr. Ivan FX. Ivan, what's going on, man? Can you hear me? Oh, I think he's frozen. His camera's gone. Never mind. We'll take Ivan out of the picture. Maybe he'll come back in a second. I think he's got some technical difficulties. no worries. When he's back, we'll bring him in. Again, guys, lots of things to react to here. You've got the indices catching a little bit of a bid here. Again, I've mentioned this, the NAS 100 also. NAS 100 has been very interesting. Part of the reason for that is that when we look at the smart money tracker, what we've talked about is that of the indices, the NASDAQ is the most intriguing in terms of institutional positioning. What do I mean by that? Well, take a look at the S&P and the Dow, and you'll notice that there's quite a heavy short exposure from institutional traders. But on the NASDAQ, you actually have a slight preference to the long side by professional traders. How do we have this information, Nick? This seems pretty interesting. How are you getting this? Well, this is from the COT report. And my company, A1 Trading, we build software tools for traders. So we're a developing team here in Atlanta, Georgia. We build software tools that allow traders to pull more useful information for the average everyday trader, not just for everybody that's on Wall Street. So we're trying to build tools like that that are powerful and can assist traders in finding better setups. Well, we use the COT report, we pull it in, and our software basically cuts it all into bitty pieces and makes it actually consumable in a visual format that is easy to look at. So here's the thing. When we're looking at this, we have our most bearish, what you're reading from left to right here is the most bearish assets are things that institutional traders have a short appetite on it. Not only an appetite, but they're actually positioned on the short side of. So if you're looking at the Japanese yen, institutional money is very piled on the short side. Take a look at the S&P, you have a similar scenario, but then look at the other side. See that little shiny speck of dust there? The gold market is very hot by institutional traders. They're very long. Same with the euro, same with the oil market, platinum, the Japanese stock market, the dollar, silver, and creeping into position is the NASDAQ. So a lot of interesting stuff here. And again, we can pay attention to this. We can actually get even more granular. We have the tables and rows that show you all the different metrics. So for example, if we're reading gold, we have the most number of long contracts compared to short contracts, right? So we have a 79.7, basically an 80% long to short ratio. There's a heavy preference for longs by institutional professional grade traders, investors, right? Hedge funds, banks that are speculating, they are long on gold. Okay. So if we know that, and we also see that the change in long, they've increased their long positions recently and they've decreased their short positions. This is a green flag for gold, right? So this is part of the reason why I am personally long. Now, of course, I could see this thing turn back around, but I've been positioned long as well. I use this data to try and find those setups. If you guys want access to this data, here's how you can get it. Let's do this. So using the link in the chat here, if you guys would like trials, you guys are going to blow up our support line right now. They're going to be overwhelmed. If you guys want to try out the software, if you want to check it out for yourself for free, click this link that's being dropped in the chat. And I'm sorry in advance to Emily, Hallie, and Drew if they're in the office. Here comes some free trials. Guys, if you want free trials, we're handing them out right now. If you click this link, you're going to be connected to one of our support reps here in the office. If you guys want to try out our software, again, we're a software company out of Atlanta, Georgia. We build tools for traders. If you guys want to try out our COT/smart money tracker data, check it out for free here today. See if it's a fit for you. Yes, we do want to sell copies, but we want you to make sure that it's a fit for you first. So if you're interested in it, check it out. Click this for a free trial. It's going to connect you to someone. Just ask for a free trial, and one of my team reps will get you set up with a trial. So again, do not miss that opportunity. We do not do these very often because they are very demanding in terms of what we do with trials is we go one-on-one. So we set you up, we answer your questions, we work through the software tool to make sure it's a fit for you. We don't want you buying something that you're not actually interested in. So yes, there you go. So I'm not sure where Ivan went. We had him coming on for the show, but I haven't seen him in there yet. Yeah. It's too expensive, Nick, especially for those out of the US. Message us, Nima. We might be able to work with you. We try and be accommodating to people who are in countries where the United States dollar is very expensive. So message us. Let's take a look at the pound here. What's going on with the pound? Look at that, guys. Follow through is here. I mean, we are now 10 minutes post release and still seeing this dollar move hold. Very interesting here. We've got the dollar down here today, and yet no erasing of those moves. So again, CPI came out cooler than expected on headline, stubborn on core. And, I'm not going to lie, this is a bit confusing for me because core CPI saying so stubborn, this was the one that I thought would have more merit. And yet what we're seeing is that core stayed elevated. Core stayed elevated. Headline came down. And so I would have thought that this would actually have some strength to counterbalance. So I would have actually expected this dollar move to erase, right? I'm hoping that that is not the case because, as you guys know, I am long gold. So look at that. We're floating. We got up into the, we're up on the four digit profit now. That's awesome. And suddenly we're on a green day. Went from down about $2,000 today up $1,500. So that's a nice little turn of events there. We'll see if that holds. Again, watching that one closely here today. Is Emily in the office? I'm not sure if she is. I know Hallie is. Okay. I just messaged Emily to hop on the talk to if she can, just because we're getting a lot of people have requests for trials. So yeah, look at this. So gold continues to stay there. I mean, this is strong. And James, have we heard from Ivan? I know he was all set up and then he collapsed. Maybe his internet went out. Wait, let me check my message. Julie's here too. Okay, thank you. Yeah, may need to ask her in a second, but I think Emily just said she'll hop on the live chat to help out. Said he lost internet. Dang. Okay. So guys, we have word from Ivan. He is no longer able to make it due to internet outages, but that's all right. We'll keep going. We'll take a look at some charts here. I want to look at that NASDAQ, and this is so interesting here today, guys. The NASDAQ is making its rounds here. 13,310 printing. Look at that momentum here to the upside. Let me see. I'm doing some research for you guys at the same time here to see. So U.S. inflation, here's your headline stuff here. The annual inflation rate in the U.S. fell to 4.9% in April, the lowest since April 2021, compared to market expectations of 5%. Also, core inflation decreased slightly to 5.5%. Still, compared to the previous month, the headline CPI and core rose 0.4%, matching market expectations and pointing out that inflationary pressures remain elevated. Very interesting reaction from the market today, guys. I'm not going to lie. This is still, I'm going to have to take some time to understand this because, again, core remains sticky. Headline, of course, came down a bit. But again, those two things can be very combative in nature, right? Because if you have core stubborn, if this is core, right, and this is headline, it's just very intriguing because, again, with core being stubborn, those are your more stable goods, right? Like toothpaste, right? We want to, if those prices are coming down, that's showing us that producers are potentially charging less. And of course, guys, that brings into another question. Tomorrow we do have PPI numbers, which may also add some context to this. We have PPI numbers coming out tomorrow, which will give us a look at the producer side. So today we just got information on the consumer side, which showed us that, again, consumers across the board, we did see a decline down from 5% forecast, 5% previous. We expected it to remain unchanged, because, by the way, because of oil prices elevated for a brief period of time in April, well, it came down to 4.9%. So it's interesting. I mean, that surprised the markets. But then what is keeping me stuck is that core remained elevated. So again, this reaction from the market, despite me wanting this to happen, I'm long gold. I want this to go up. I'm just a bit confused by the move, if I'm being completely honest. Does anybody, if anybody is smarter than I in the chat, and yes, also thank you, Brandon, for clarifying. For those of you who do not know, core does not include energy and food, which are the highly volatile items, right? Food prices go like this. Gas prices at the gas station, they're all over the place, right? Nick, can you give a shout out to my trader friend in Dubai? His name is Anita. You're a funny guy. You're a funny guy, but you didn't get me. Close. Funny guy. So I do, obviously, I want the price of gold to continue skyrocketing because, again, I'm long. I would be crazy to say anything else. I'm just a bit confused and trying to understand why. So, Ivan, yes, help us. We need you. I know you got some internet troubles. What is going on, Ivan? Why the dollar reaction here to the downside? Ivan is highly educated on the fundamentals as well, so that's why I bring him on the show all the time. It's very expected move due to lower than expected CPI. Yes, I understand that, Ivan. My question more is with core. Why is core not counterbalancing a little bit here? You know what I mean? Market fear makes it go up instead of high, means the Fed may raise rates, which means more banks may go under. Rob says I bought the membership, by the way. Hey, Rob, welcome to the group. I'm glad that you have decided to join us. Yeah, let's do an ad real quick, guys. We're gonna come right back. I'm gonna get an answer for you on this. I will have some more thorough explanations, and we're gonna talk trade setups here in just a moment. I've got, of course, my gold trade. Real quick, we're gonna take a quick break and hear from one of our sponsors. Check it out.
Attention A1 Trading Show fans, if you're looking to sharpen your trading strategies but don't know where to get started, we want to take a moment to tell you about our sponsor, Forex Tester. Forex Tester allows traders to backtest their trading strategies thoroughly before going live with real money. With a copy of Forex Tester, you'll be able to test your skills on historical data, walking step by step through and taking hypothetical trades. Don't miss this amazing chance to practice your skills and save yourself money. For a limited time, get access to Forex Tester for 10% off by using the promo code in the link down in the description below. Now, back to the A1 Trading Show.
And we're back. Thank you guys for sticking around here. Yes, check out Forex Tester if you guys don't have it. Again, maybe you'll be less confused than I am after doing that because, again, Forex Tester is a great sponsor of our show. It's a great way to get into the charts, back test, and don't risk your real money. You can test your concepts, make sure that you are tight on it before that case. Oh, my goodness. Thank goodness. He has arrived, our savior. He's going to have all the answers and everything is going to be easy now that Mr. Ivan FX has arrived. Ivan, help me. Why? Why is this happening? EXY going down hard. I get you on the headline CPI, right? Headline CPI came out 4.9%. That's better than expected. We were expected to go flat. Oil prices were elevated. This was unexpected by the markets. But this one is what's getting me. Core has remained so sticky, it even went higher than expected. So do you have any insights for us, or should I just go to bed?
Yeah, go to bed so I can take over. Now, I saw core as expected, 5.5 versus a consensus 5.5. So that was kind of like but so what core didn't do was it didn't go higher than expected or much higher than expected. So it's more like what it didn't do. We are still on the path. We're still on a trend line to lower CPI, which basically the whole market has basically just dived into, and they're all expecting lower CPI, and sure, they got it for the headline. Now, it's still lower, right? We are at 4. We're
Okay,
now at 4.9, so it's still
Ivan,
like
sorry to
we
cut
are
you off.
trying. Yeah.
Core was expected year over. I'm looking at the month over month. That might be what I'm missing. Do you have in front of you the
Yeah,
core CPI
yeah.
year over year? That's what I'm. That's what I'm probably not seeing. We had a little bit of volatility, but you're saying it sort of was on target. I haven't seen that number. That's probably what I'm missing, and that's I need to switch off Forex Factory for that reason. Yeah, let's. Okay, so what have you got here? Zoom in for us. What are we looking at?
So that is headline year over
Yep.
year 4.9, month over month is 4.4 as expected. Same thing with core 4.4, which is still double as much as it should be, but still. And this is what I'm talking about. Core year over year 5.5.
Now it makes sense. Okay. Okay. So I was thrown off by the month over month number, whereas what you're pointing out is that core year over year actually came out nothing too surprising. It made sense. That helps a lot and actually clarifies a lot. So thank you for that, Ivan. This is why we bring you on.
Secondly, as Brandon says, and my eyes didn't see it first, last month it was 5.6, now it's 5.5. So we are going lower. And the same thing with last month, it was 5% on headline, now it's 4.9.
Awesome. Yes. So in both camps, we have some good news in terms of inflation coming down. It's got a long ways to go, but yeah, that's actually pretty good. So cool. Thank you for explaining that, Ivan. That actually was very helpful. Sometimes, as you know, when you're on camera like this and there's a million things buzzing, sometimes it's hard to collect your thoughts. So it's nice to have you as the partner on the channel to come on and do this, guys. Let's just thank Ivan really quick because of his help here and showing up and working through his internet problems. Can you guys make sure to go subscribe to Ivan? He has his own YouTube channel. Again, he's a great guy to follow along with. He's also one of our coaches within the Discord channel. He does an amazing job there and he does coaching webinars. He works with traders and you can actually even go one-on-one as I just did. He just taught me something. So, what I learned today is don't use Forex Factory. It doesn't have everything you need sometimes. So thank you for that, Ivan. And yes, guys, go subscribe, check him out, and show some love to Ivan the Conqueror. That's what we should call you. So,
You.
Ivan, what else are you watching? Charts, setups?
Yeah.
What are you thinking?
I just want to explain to Mark why is DXY in the crapper then. That's the exact reason. Yeah, that's the exact reason what you would have, because stronger dollar equals, or higher interest rate equals higher dollar, because we as traders get more paid to hold the dollar. Now we are now with this lower CPI, which is driving interest rates. When this interest rate, with the inflation being lower, that will be lower interest rates down the line. That would be lower dollar.
Yes.
So
yes. Exactly. Yes. So
it's
dollar. Also to add on to that, Mark, and anybody else who's a bit confused by this, I'll show you something here that might be interesting to you as well. The S&P 500 here, as well as the NASDAQ, which both of these are reflective of risk on assets, right? Think about the stock market. People tend to buy the stock market when things are optimistic, when things have better outlook. So what we like to call that is a risk on asset. So a risk on asset means people are willing to put risk on the table. That's the way I think about it, right? So when we're talking about this move here today, it makes actually good sense now that Ivan helped us out with the year over year concept. What we're seeing is that inflation is retreating. And if inflation retreats, that's giving the stock market more optimism that things are going to get at some point under control and that there's that possibility for a softer than expected landing. I wouldn't go so far as saying, oh, that's what's going to happen, but it's improving the odds, the probabilities. And that's why the market is reacting very positively and sending risk on assets to the upside here today. We also mentioned another risk on asset is oil, and oil is also trading up today. So we're seeing some of the risky assets catch a bid here off of this relatively good news for inflation numbers. So very interesting to see this reaction. And again, I think that this has a lot of potential to turn into something bigger now that we're actually seeing inflation, really continue to move in the right direction. It could be interesting. So, Evan, what else are you what else are you watching here today?
Of course, the breach higher on Australian dollar. Um, I honestly thought earlier they were setting up for a bearishness. I was like, this one, let's see if we should go lower today. And hey, we're making a higher high. So I
Yep.
guess we are back to bullish again then. So
Yeah, no,
yeah.
I was just going to say that the Australian dollar, to the point that we just discussed, catching a strong rally here today. It goes along that same concept of risk on assets. As we know, in comparing the Australian dollar versus the US dollar, clearly the US dollar is more of the quote unquote safe haven currency of the two. We'll see if that gets challenged with all the BRICS nation stuff and, of course, the debt ceiling concerns, but whatever. The point is, today, the Australian dollar is looking more attractive off of the idea that, again, inflationary pressures could cause some relief in the markets, giving some bid to some of the higher risk currencies. So, yeah, very, very interesting there. You've got euro pulled up. What's your thoughts there?
In as much as this makes us sell the dollar, euro is, I'm just pointing it out, somebody said, I think it was Yusuf said you should look at your dollar. This is the least technical good trade to the upside that I can pull out, because it's a range now. So yes, this might lead to more dollar weakness and the euro go higher and all of that, but I would rather look at pullbacks on Australian, look at pullback on pound, and pullback on New Zealand dollar against the dollar more than the euro dollar until we break 111, because I hate ranges, and ranges has one thing in common for me. It is a forex account killer.
Yes, no, that's a fair point. And I want to also go off that concept with the euro. Discussed this briefly earlier, and Ivan, we've talked about this a couple times this week in terms of the smart money tracker and the euro positioning. One thing that might offer some solution to what you're talking about is, take a look at this. You've got the euro as well as the US dollar. Both of these assets have pretty high long exposure from the commitment of traders data that we follow. So what we're looking at here, for those of you who are in the audience who do not know or have not been regularly watching the channel, this is the COT report data, and it tracks, again, what non-commercials, which are banks, hedge funds, institutions, what are they buying and what are they selling? Right now, what you can see is that there's a pretty heavy preference for long side on both the dollar and on the euro. So to Ivan's point, talking a little bit about choppy markets, right? It may be partially because, again, there's not a strong winner here, right? We have preference to buy euro, we have preference to buy dollar. So when you cross them, euro dollar, there's not like a strong winner and strong loser. But to Ivan's point, when he talked about the Australian dollar, it's very curious, very interesting that here's the Australian dollar. There is a clear divergence. You have a strong preference to sell the Australian dollar from institutional traders, and you have a strong preference to buy the US dollar in terms of that. So that is sort of an interesting story, because you have institutions sort of positioned short. The interesting thing, however, will be a reversal of this trade can sometimes occur, and it can cause some big swings in that regards. Now, also, we talked about the yen. The yen we've talked about a lot. This continues to be our biggest short exposure by institutional traders. That remains relatively unchanged over the last several weeks. And then when looking at the dollar, you sort of have a decrease in longs, decrease in shorts. So kind of an interesting thing there. But notably, you guys can, if you'd like to, you could pause the stream at any time. Just take a look at all the COT data. By the way, also, we did mention this earlier. We'll drop it one more time. If you guys would like to try out the Edge Finder for free, we do have free trials available today. If you would like that, if you want to check out our software, click this link and ask for a free trial. We do not usually do this as a trial option, but if you guys want it, it's right here. click that link. It's going to open up a direct message where you can have a conversation with one of our support reps. There it is. And ask for a free trial. Somebody will hook you up. They are in office right now to get you set up. So Ivan, I want to ask you about yen pairs. Somebody in the chat was saying earlier that the yen pairs are getting real beat up today. Do you have any thoughts there?
Yes, and for the longest, I have said, "What about shorting UCN?" And sure, it fell today, and I'm like, "Yes, finally, my long-term direction on USDN is coming back into play." Um, I'm not going to take any credit for it, but I'd like, you can probably look for a sell at around 135.50, and it fell from there. So it's more like, okay, cool. We are now back into kind of the game of what if we can get a pullback yet again and then shorting again. So that was kind of the aggressive entry. I don't like the entry down there because in my books, we should short from 136 and more of where when we have just fallen out of top peak, we should come back to the bottom of it, which is kind of here, and which we didn't. That makes it very vulnerable to short like in down here. So for me, it's like, okay, now we have a break. I will then have a pullback up to 134.80 somewhere, and then maybe short tomorrow.
Sure. Yeah, I haven't really been paying too much attention to the yen pairs recently. It's interesting that dollar yen is selling off here pretty strong. You've got that's a 0.7% move down here lower today off of this. Is the yen itself strengthening? Is that what's going on? Yeah, there's a little bit of yen strength coming into the markets here today off of this cooler than expected inflation. That's an interesting one to me. We've got like things like Aussie yen. Let's take a look at how that's going. Slight upward move there in ZDJPY. Slight move up as well. Yeah, it's an interesting move here. I want to also double back and see how my gold trade is doing. So you've got gold still pushing higher. I would love to see if this thing can get back to test this highs yet again. The thing I keep watching for is to see if we can in fact break out. I'll be looking to trail aggressively from there as we'll be in new high territory, which should be very interesting. But again, I do think, Ivan, I mentioned this earlier. I think for us to get to a new high in gold, we need to see a real catalyst. Like, for us to take out these levels of resistance, I think we need some level of fear to come into the market. And there's several candidates for that. What do you think would take us to new highs on gold? Do you have any ideas?
Taking us to new highs is lower CPI. But I'm just thinking, like, why would yen get strong? Why would yen get strong? Why is gold going strong? That's pretty easy. It's just dollar weakness. So as far as I see it, is there's a shift from dollar, buying dollar, going into buying yen and buying gold, because now you're not getting the returns you would expect out of the dollar. So the catalyst is basically lower CPI, I would argue. And another thing is always funny to say, but unexpected events like some kind of war, some kind of rocket, some kind of unexpectedness is always a good driver for gold. But just in normal market, a lower CPI.
Yep. All good points. Ivan, I've got to hop off. I've got a podcast episode I'm scheduled to do. So I'm going to leave you to take over the stream here for a little bit if you'd like to. Go as long as you'd like. James is in the back end, so he'll take you from here. Guys, stick around with Ivan. He's got some great commentary. Ivan, thank you for joining on, working through your internet problems and joining us here for today's event. And we'll see you back next time. See you later, man.
See you later. So the most important thing here is Brandon has a good point. Is this going to lead to, which is the whole point of why we are following it? Does this lead to a change in monetary policy? And to an extent, yes, but to an extent, no, because the change is not enough. We're still having very sticky. It's still 5.5%. It's still 4.9. It's still very high. Now you have to look at other indicators. Is the job market falling or going worse. It hasn't yet. Are we going to have are we going to have good enough GDP? Are we going to have good enough also business confidence and consumer confidence? Is the housing market crashing? I've seen that in California, that they have said that house prices fallen 20% or so. Like, there is a range of indicators. When CPI isn't strong enough to the lower side, you have to then look at the whole pool, which they should do anyways. So it might lead to a pause. I'm inclined to say that it leads to a pause, but it doesn't necessarily, like, you can still get hikes, right? You can still get things that be like, wow, we still aren't done. So all in all, yes, this should lead to pivoting. This should lead to pause in the next meeting, but there's no guarantee because we don't have all the other indicators or all the other data out that comes later in the month. But just by this one, there's a step in the right direction at the bare minimum. Now, but I'm trading, but I'm day trading. All I care about is being on the right side of the market. Yeah, that's one thing. But you also need to be right on the job market, on the forex market as of general. Even though as a day trader, you're like, okay, I'm just need to be at the right side of the today's volatility. Yes, I do agree with that. But overall, there is a deeper and longer term trend that I have found out when I day trade. If I'm against the longer term trend, if I'm against the longer term theme, I generally lose anyways. Pound will continue up because the bank will hike rates. Now, that is, as I said earlier, David, that I would rather you buy British pound, US dollar more than a euro, because of the high CPI, which I've mentioned before, and that Bank of England BOE is going to continue hiking interest rates. So in essence, this is the greater trade in that trade. Now, am I in this trade? No. Have I forgot about it? Maybe. I've been busy somewhere else. So I don't have a trade here yet. So am I going to enter this one now? Right now it's too high. So what I generally tend to tell you guys is look for the next day. Now, as a day trader, or even as a trader, like, if you were to sell Australian dollar, US dollar today, this morning, and I hope you didn't, but the whole point is, if we turn bearish, or like we have like lower candles, this is just a pullback in a bullish trend until it breaks twice, and it didn't. So fair enough on that one. But that would be your trading plan. So there's always a day tomorrow. There's always a pullback tomorrow. So right now we are pretty high. Are you going to buy Australian dollar now, or pound dollar now, or New Zealand dollar now? I would argue no, for the simple reason is, if it is back down to 43, 63, 40, like back down to these highs of today, of earlier today, then it's quite a distance up. And every time you do like 40, 50 pips, 24 pips in this case, difference, you're more higher prone to hitting your stop loss with higher loss than if you bought when it was down here, and then only your stop loss is down 26 pips instead of being down 50 or 60 pips. What's your favorite pair? Sorry. That was Pietro. Says, hello, I'm considering long position use this Swiss if further price action will confirm my idea. What do you think? I probably shouldn't have read that question, but my answer to that is I am not sure. Now, I have limitations in my knowledge because I can be everywhere all the time. But as Swiss is strong and dollar is weak, that would only lead that one to fall. And it hasn't been bullish yet. And I know that you said based upon technicals, but fundamentally or sentimentally, and how the market has been positioned so far, it doesn't look too favorable. So I would be very cautious about that. I would rather sell the dollar against another strong currency rather than buying dollar against a strong currency at this point currently. But it can change in 2 weeks or 1 week, and it can be completely opposite. So don't necessarily be discouraged, but just at this moment I wouldn't take it. What's your favorite pair to trade? It depends, Brandon, and it goes from euro, it goes from euro yen, it goes to Australian dollar, US dollar, it goes to Australian dollar, Japanese yen. It depends on the season, depends on the year. So right now we had New Zealand weakness when we didn't have it. That generally is my favorite thing to do this time of the year, and then euro dollar is gonna continue higher, or rise quite rapidly by end of May. So then I will have that as my favorite pair, and then it will come back in August, and then I will be downtown. I want yen pairs, and I will trade it like a maniac. So it all depends on when things is very strongly trending, based upon my expectations when it's trending. But yeah, your dollar is kind of the safest bet overall, to be honest. With calm coming back to the markets with CPI figures, what does that mean for gold? That means higher, Carl Fletcher. That means higher gold. Patience says FOMO will make you go broke. Yeah, so that's why I am, I'm very excited right now, right? But and as much as I would buy this thing, I know the dangers, and I've tried to buy this thing before at this high, and it all comes back to your expectations and your experiences and your statistics. Because what I try to teach you guys, I'm talking too much now, I can hear that, but point being is that when you try to do these situations many times, you're gonna get smacked both ways if you try to buy here. Yeah, I don't have any thoughts on Euro Swissy other than, I guess, would it be technically bullish or something? Okay, yeah, no, it's too rangy for me. It's too rangy. Doesn't move much in that direction. And as I suspect to use this, it was still same as yesterday, which is bearish to range and not currently bullish, but you said waiting for technically, which makes you have to can buy it above 9, wait for 90 to break, which is 200 pips up or something like that. Yeah, I know you're big on seasonality. And Brandon, to those who doesn't know seasonality, that's what breaks me or drives me. Because seasonality, because the thing is, like, how does it work? And in essence, is basically what has happened before is probably going to happen again, in terms of you don't wear shorts in the winter, and you probably buy ice cream in the summer, and you have certain behavioral patterns throughout the year based upon the season, based upon the temperature, because you don't necessarily eat lamb in the spring, but you normally eat lamb in the fall, or when you don't eat strawberries like midwinter because it's much better and they are in season in the summer. And there's just this thing that we all do as human beings that leads to trends in the money in the financial sector, also because of taxes and because of the sun, I guess, and when you normally spend and when you normally don't spend so much money, in conjunction with fundamental analysis, with that, it becomes a super duper good thing in certain areas of the year, and regardless of whatever your risk sentiment is currently in it kind of tends to happen anyways. Because if you take Australian dollar, Japanese yen last year around August to December, so August, around here, yes, we are supposed to be bullish, but I only caught the trends I was supposed to caught last year on this one, and it was a fantastic time to trade. But point being is that irregardless that we're supposed to be higher, I still got out of it with enough profits to feed myself. So that is that. Bella, I'm supposed to, yeah. Whatever he's paying me, yeah, probably the same thing for me. Euro yen. I don't like that low. I have to. I'll be honest with you. I don't like that low. If I'm gonna buy euro yen again, it would be like something like that. I need to have a higher high, lower low, especially trying to threaten that one is like it's a no go show. So if we can get it higher, great. But if we break 147, it's bearish and all of that. So right now it's just pausing more than anything else, and it doesn't really give me great vibes to go higher until it does go higher. So right now, it's not really I don't trade. It's more like a pause thing until so that can change by tomorrow, by the way. But right now, I wouldn't look for a buy, which I am looking for. So the brown fish. What is your outlook on UC cat? If I can successfully trade American dollar, Canadian dollar, I will be very happy. But it is a one that I have least amount of success on. So if you want to have success on that, probably not me, because I'm sorry, I can't figure this one out. This one's a weird one. It always ends up in losses on, and I have bad stories with it. It was one time I sold in a bullish trend. I got 49.9 profits out of it. My take profit was 50 pips. So I literally didn't hit by 0.1 pip, and whatever was less than a pip or whatever it was. And I was so angry because I went to stop loss later. So I'm sorry, bro. We can talk about anything else. We can talk about nice ladies. We can talk about the beach. We talk about anything. But this gives me cancer and rash and heart attack and whatever. Yeah, I wouldn't short it now. And Bear Flag wouldn't agree with you, but I wouldn't short it because of how fast it fell. That is a sign to me that we are a bit too aggressive until it breaks 133, which is supposed to be holding. If it breaks 133, that's when you can continue selling on it. But I wouldn't do anything on it at this point. That's all. What is my view on Australian, New Zealand, and UC cat? I wanted to buy this one. Currently not bullish yet, so I just do what I normally do at market opens. Is it bullish? Is it bearish? And this is bearish, so I want this to go higher. And until it does, I'm just gonna have a pause. There's nothing more to do on that. New Zealand dollar cat is supposed to go bearish, and it doesn't, and it goes higher. So to me, it's like, okay, cool, whatever. I would love that to see. So what happens when you have a reversal? So in a reversal, you have this one, which I talked about on USD yen, and I want this to hold, right? And it didn't. So what is this first one? This is an aggressive sell number one. The first sell, what does that mean? That means that you're more likely to lose money, his stop loss, but you're also more likely to have, whenever you're right, to have more profits, because the second entry is this one, which we never got. So breaks of these lows, come back to this resistance. That's kind of the more my money shot is, and we never got it, so it isn't a sell. So those are kind of where I would still go for the next 5 days, but I can see that the sand is going out of the glass. Is that all right? Yeah. So if you want to buy New Zealand dollar, Canadian dollar, Carlos, you are more than welcome to. But okay. Somebody mentioned Eurocat. I can look at it for half a minute. That's a bearish one. No guarantee it's going to continue lower, but sure, it's bearish. Mostly because of how fast and how quickly it's gone. So this is only day trade. As long as it makes lower lows and lower highs, you're kind of allowed to sell it. But this one has gone far in a very short time. So, but also it's slowing down. But if this one starts to accelerate to get down again, That would be great. And if it starts, so yeah, I wouldn't at this current point wouldn't buy it whatsoever. But yeah, and then your Aussie, same story. Those both are the same two stories. So we're asking about gold, all right? You're asking about gold to me. Okay, cool. We can do gold. What is happening to gold? What do you mean? Is it just a pullback? What's going on? What Nick said earlier, which I'm going to second. And by the way, gold can, would, should backlash on you on news events, meaning it went higher, now it's coming back. So are you a buyer or a seller? Are you strong or are you weak? Do you have experience in the kind of situation or you don't? Like when you have these news events, what kind of generally tends to happen to you? And when it pulls back so far, are you generally profitable? Because if you don't know what's going to happen, what happened, what are we doing? If you're looking for go buy on your Aussie, I wouldn't have. Well, still, you can look as much as you want, but it's not ready yet. So, yeah, I can see that. I can see you guys. You're looking for longs, Goofy and Brandon, but technically, it's still not there yet. It doesn't have a higher highs, doesn't have higher lows, doesn't have higher high again and higher lows again. So until then, so if you're thinking of what is happening on gold, I don't know what's going to happen. Just trade on demo or just doing like I do, like just a virtual trade and see would you make money or not. And when you do that enough times, it should go so many times that you don't fear anything anymore because you know it's going to go great. Because when you go buy bread in the store, you actually go back. You actually think it's going to be a great thing. You think it's going to give you food. It's going to take away the hunger. It's going to be a good product. So if you do the same thing for gold, you do it as many times, and you know that whenever you do it, it's actually going to work out this amount of times. Straight up easy, isn't it? Now you add emotions to it. Now that's when you lose on gold. But yeah, I would argue that as long as you are above 25, as long as this is making higher highs, higher lows in the short term, you are allowed to continue buying it. But if it makes a little bit low, 2025, don't hold on to a loss that is only going to continue lower. Okay? So I would say right now, looks like a good buy. But it's not financial advice whatsoever. It has to be coming from that you in this situation generally makes money in that situation. And I would say I do, but I don't know if you do. And these can be one of those stop losses ones, so don't worry. Yeah, Johnny, yeah. Gotta go, Brendan. Good to have you here. I don't know if there's any more interest, but British pound, Japanese yen. Okay, so let's do this how I want us to do that. Okay, that is bearish integrity. What does that mean? That means that if you are a seller, you're going to sell here, you're going to sell here, flat out, because of what I earlier talked about. This is the best place to sell in the reversal. Now we have to make a new lower low, come pull back, and then sell it again. We were bullish on it, and I wanted it to go higher. So when I see this as a buyer, I'm like, yeah, I need a break as a buyer, higher, like that, or I can look for a move down to 169. But then I have the reversal. Then I have to be very certain that what I'm doing, because this will just continue down. So once it starts falling, this one, the most important thing is when it starts falling, you don't want to be in front of the train. So make sure that some kind of this happens. Is pound bearish? Not necessarily, but that's the sell point. So is it bearish? Not really. But that's the bearish price point, meaning short-term wise, that is an aggressive interest number one, as I talked about earlier. That's a number one trade. Okay. Number two trade is new lower low, pull back, that one has better odds to sell. But I'm not going to sell it because I'm bearish on yen and bullish on pound. So it's kind of like counterintuitive. So if this one falls down, I'm just going to look for reversal back up again. All right. And Mr. Who Samiketo asks for euro dollar. Okay. What did I say earlier today? I said that euro dollar is the worst one to trade if you're thinking of bullishness. And it's now coming back down again. It went up to 110 and some change and coming back down to 109.8. Are you going to buy it? This is the moment. Do you have profitability in that situation? I don't. Maybe you have, but I don't. So for me, it's a no-go show. Hello, Rafin. So that's just my small little, because we are mostly in a range. Retail traders buy, institutional sell. They're taking profit, kick out a retail trader, and then they continue to their target. Yeah. Market moves are not random. No, I'm not talking about it's random. But if British pound, Japanese yen is at a target that most traders take profit at, then it's just a profit taking, and then we're going to back up. Then we're going to go back up later on anyway. So there's nothing to worry about. Okay. Now I'm going to go away from looking at whatever you guys are talking about, and I'm going to talk about what I want to talk about, which is what am I looking at? So currently, what are we? 10th of May. What generally tends to happen around this time of the year is dollar strength. I'm not saying that's going to happen, but I'm saying that what tends to happen. And we have dollar bearish, so it kind of doesn't. It kind of doesn't. So I need to be aware of a couple of things, right? When it comes to dollar, if we break 102.36, it's a far-fetched theory, but I need to be aware of that. Because if you go back to, sell May, go away, so you have May last year. So this is May last year. May. Here, reached around 13th and then fell off. Okay, 13th was the peak, though it reached up to 13th. And then we have this one here. That is 2021, was a different year, but fair enough. Fell, bottomed out around 25th of May, went higher. Okay. 25th is another point. But my point that I'm trying to make, bottom out 13th of May. What I'm trying to point out is half of the month, regardless of what we've already done, tends to change the market, change the direction of dollar. So we have been bearish so far on dollar. So I don't know if it has enough juice. So irregardless, dollar bearishness still prevails, but I need to be aware of the danger. I need to be aware of what is going to happen next. So my kind of theory. So what I've done, yeah, okay. So when you go through what the documents I'm making you guys is, we can find. This is top secret, by the way. Where is it? End of the trend. Okay. Can't remember what it was, but there's somewhere in this document where I talk about this being end of the trend, meaning when you have had a reversal, you have a bullish trend, and you are a certain amount of pips far away from your current entry. It's kind of like, what are you going to do then? So what tends to happen is that we tend to have like a very hard fall or very hard rise by the end of the trend, and it looks like everyone, woohoo, fantastic, right? But it's actually the end, and it's just It's just what traders and markets do to make you feel like there is still push, but it's actually the end. So once you start looking for a trade, like I thought I had it somewhere, but fair enough. There we go. Finally, end of the trend. Once you have this kind of long uptrend, and all of a sudden it breaks off, like don't tell me I didn't tell you, kind of a thing, because this is underneath the markets you should avoid. A market you should avoid is end of the trend attempts. So those are the risks to it. So if I buy pound dollar now, am I going to be profitable? Am I going to be in a winning trade? All of that goes through my mind. So we're quite late. So I need to have reduced my lot size. For Australian dollar as well, we are quite late. For New Zealand dollar, we are quite late. So that's just builds up to the notion of, what if we reverse now? Am I going to do something else? So I would probably still look for a buy there, but I would also look for a buy in Australian dollar, New Zealand dollar, Canadian dollar, pound dollar against Japanese yen. So I just need higher high and higher low, and we're all good and dancy going higher. So if you're asking what I'm looking at, I'm going back to yen pairs, and I'm going back to looking for bullishness. And if you get bearishness, then I'm not trading it. Can you explain why yen is strong? The yen is generally not strong because all the yen pairs are bearish, but all the yen pairs are bullish. But yen today is strong because of dollar bearishness, because all the bearishness that goes from dollar goes to strengthening all the other currencies. Because now that America is losing momentum, and which other countries still have momentum, Japan still has momentum. And the only problem is, I will change my policy, by the way, on the Japanese yen when the Bank of Japan changes. It can happen in a time where they have too much inflation and they have to start reducing their ultra loose monetary policy, which is making Japanese yen extremely weak. So it's just a short term move. One thing else on the Japanese yen being bullish, and this one will continue higher. So tomorrow, the next day, you will not even feel it that it was even bearish. Buying US dollar, Japanese yen is a very bad idea because it's currently bearish. King Veda says news is always crazy. There is two things that's problem with that. News is new information that you didn't know from before that we are necessary to create market volatility, which is a good thing. Crazy is not a word I want us to use in this stream because that influences your emotions. News is not crazy. News is necessary for you to trade because that will just a flat line. And if you think it's crazy, you're only going to lead to emotional trading. Goofy. That's the point. That's the point, Goofy, is that they can't interest rates will make their government default. So they are basically in between a rock and a hard place. And I said, until then, I will short yen. Whenever that day is. Is it today, or is it in 2 months, or is it in 3 years? Doesn't really matter. Thank you, Elda. Last view on gold, and I will be out of here. Yeah, okay. Gold is still uptrend. I said you can probably look to a buy there 2037 if you did so. Stop loss below 2025 or 2024. So for a short scalp, and if you're wrong, then you're wrong. Fine, fair enough, whatever. But we haven't broken 2050, which is a long-term high we need to break. If not, it's just a short pullback and then go back up again. So either that, it's a swing trader, or that. Those are the 2 plans. But scalping, that is using this one as a resistance, and it's currently not holding, so it is what it is. Did they hit target, Harry? You're such a great person. Thank you very much, bro. Did they? Okay. That changes everything on Japanese yen. CAD didn't. Which I'm not. What did you say? Euro yen didn't. New Zealand yen. Okay. So okay. And that definitely sucks, though. Okay. Okay, that sucks. I want to buy Euro yen and Euro yen to continue higher, but this isn't great. But yeah. All right. So I'm looking for bullishness on Japanese yen pairs because that's my overall theory. Dollar bearishness, overall theory, and then technically getting an entry is not really favorable right now. So come back tomorrow and see if I can figure something out. I'm not going to force anything. All right, people. Boom. See you soon. Love you, family.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember, you can improve your trading performance 30 times faster with Forex Tester 5. Backtest your strategies using real historical data. From all of us at A1 Trading, have a great day, and we'll see you next time.